welcome, all zero of you to this live stream. Come on, Friday night. Jeez. People are about to wake up this Friday night. Let's get this cracking. So it's Marcus Kwesi, retired professional athlete, retired roadman, retired refugee, immigrant, son, boyfriend, and I'm going to help you live your best life, the business class lifestyle. Yes, that's right. We don't talk about economy class, that's a given. We don't talk about premium economy. It doesn't take too much work. We want everybody to live the business class lifestyle because it's achievable, and from that base you can do pretty much anything you want and need. Now, another round of applause. This is the first in a hopefully a very long series. Thank you. This is the first in probably a very long series. It's called Finance Fridays. So yeah, Finance Fridays. Every Friday we're going to touch on personal financial topics. I think that it's a very important thing to stay abreast of. A lot of issues that people have in today are very hard to solve in many different ways. If you've got a health problem, you could be in a situation where money can't even help you. Even the other day you saw in the UK, these people, apparently Nigerian politician, they've been found guilty of it, but basically they trafficked a random guy that worked in a store in Nigeria to the UK. He probably was a match, but the daughter of this wealthy Nigerian politician was unwell, and they trafficked him to the UK to harvest the organs and, donate that organ to the daughter. They weren't even able to do it, despite promising the guy money, probably even a stay in the UK or something like that. But it just goes to show some things money can't solve, but there's a lot of issues. There's a lot of issues and a lot of like the type of background that I had in my my estate. Most people's families that were broken up, at least 70% of them money problems. At least 70% money problems. Money can solve a lot of problems, or at least stop problems from getting out of hand and causing breakdowns in situations. So Finance Fridays, every single Friday, while you're out there, you've had a couple drinks and now you're weeing away all your money. You're weeing away. You're just watching it splash back on the basin, right? That was 3 drinks that you just had, gone down you, coming straight out you in wee. So while you're doing that right now this Friday, I'm going to remind you that finances are important, and I'm going to share with you some information and information only, not advice. No, we're not giving advice. If you want advice, speak to a suitably qualified financial professional. This is not advice. This is information only. So that's a caveat there. Don't come to me if your finances brought down. So title of today's show: your chick is hot, but financial hell is hotter. This is about to get real, because like I said, it's what, UK time 1:45. You're about to, let me actually set the scene. You probably started getting ready 10:30. You hit your venue. You hit I don't know, depends if you're going to go 1 or 2, but you hit the first venue maybe 11:30. If that started dying down, maybe 12:31, you moved up into a club. So these times you're probably in a club right now, and I'm going to let you know that you're wasting and you're not properly set up financially. And hopefully I'm going to share with you how that works and tell some harsh truths, because like the pastor once said, what did he say?
The chick is hot, but hell is hotter.
What you say?
The chick is hot, but hell is hotter.
Hey! What did he say?
The trick is hot, but hell is hotter.
We say hell, we're talking financial hell. You do not want to be in financial hell. Like I said, a lot of issues can be solved with a degree of finances. You man are, walking around with bags to get rid of bodily fluids just because you can't, you don't have the finances for NHS, and you got to wait now. You just got to wait for someone to, whenever they feel like there's a slot that you can fill, sort your medical issue out. You do not want to be living like that if you can avoid it. I'm telling you. We already know this when it comes to relationships. I believe it's 70% of divorces, breakdowns in marriages are down to financial issues. This is not just, you might think, yeah, I'm just going to have a drink. This adds up. It adds up in terms of your lifestyle, and just how you assess yourself financially, because you need to do that. And today, like I said, we're going to be talking about accounting on yourself effectively. And we're going to look at, what do I mean when I say accounting, what's all that about? What are accounts? What accounts? Statements, accounting statements. What's all of this stuff? So we're going to look at it in terms of accounting statements for you, not a business. You. We're going to look at you and your accounting statements. We're going to account you. We're going to see how you should account yourself financially, and then we're going to look at the three main types of accounting statements. I'm going to go into that in a little bit of detail. And that's going to be pretty much it for today. But because this is the thing, right? Finance is a bit of a tricky subject if it's not your forte. I don't want to sort of throw everything at you all at once. But we're gonna keep it relatively top level. But we're gonna be honest and real with this conversation here, because, like I said, chicks are hot. Your man is hot. Financial hell is a very hot place. You do not want to be at the summit of financial hell. You do not want to be in there. I'm telling you. I am telling you. I've had to walk through there a couple of times, and whoo, man got bun up. So we're gonna touch on all of that today. So first things first, what do I mean when I say accounts? Now, sometimes you need to take things somewhat literally. What's an account? An account of, obviously, an event or a period of time. Now, even a news reporter provides an account of what happened just now, what happened in that street. A witness provides an account of what they thought they saw or what they thought happened. So financial statements are just effectively accounts of finances in either a specific moment in time or over periods of time. That's basically it. It's the same account, but we're looking at your numbers. We're looking at the underneath the bonnet numbers, and that can be a snapshot or periods of time. So I'm glad we got that one out of the way. So another round of applause for getting that one out of the way. Thank you very much. Thank you very much. Thank you very much. Thank you very much. Thank you. So the first statement that we're going to touch on now, I call this the bread line, because if this is not in order, you won't be able to go too far. And unfortunately, a lot of people cannot come out of this situation. And this is the big killer. When times are tough, this is where it all goes wrong. And this is your personal. So like I said, we're relating all this to just you as an individual, right? We're looking at your personal cash flow statement, but your personal cash flow. So in the corporate or business world, a cash flow statement is effectively a summary of the cash or cash equivalents entering and leaving. Okay. So, like I said, right now, people are pissing away, excuse my language, urinating away hundreds and hundreds of pounds just tonight. Cab. And look, I'm not saying, I'm not saying don't do it. I'm just saying have your finances in order and know what you're doing. That's the thing. A lot of people want to make out that things are something else. You are urinating away money. Some of you are smoking away that money, smoking it away. Some of you are junk fooding the money away. Yeah, some of you need to, get back in the jungle or the gym. You need to choose whether you need to choose either you're going to be in the jungle or the gym. You're going to be in the jungle like a big, massive elephant, yeah. But you're going to get to the gym. You're going to have to choose one or the other because you're just out here. You're stuffing your face. That costs not just, like I said, this is the thing. That doesn't just cost financially. That also costs in terms of your health too. So yeah, the first thing that you want to look at is your cash flow. So effectively, that's as a person, because we're looking at this from a personal point of view. That's your day-to-day running costs. How much are you spending on travel? Do you take bus and train when you can, or are you always cabbing it up? This is cash flow. This is eating into your cash flow. Some of you have budgets for smoking. That's eating into your cash flow. That's your day-to-day upkeep. Smoking, you're smoking your day-to-day upkeep away. That's insane. Some of you are insistent on not preparing a couple meals a week. You don't have to do it every bloody day. Some of you are insistent on not doing that and ordering Uber like that. This is destroying your cash flow. If you the big thing with cash flow is if your cash flow is not in the positive, you're not going to be able to have any funds to do something with, to invest either in yourself or something. You're just going to always be. You're going to be in a rat. You're going to be in a rat race. You're going to be in the hamster wheel. You just. That's all you're doing every single day. And this is a very, very important thing because if you can't sort out your cash flow, you're not going to go anywhere. You're not going to go anywhere very, 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 very fast. And right now, you've got a situation. We've got a big situation on our hands. We've got a cost of living situation where the things that you had to do day to day, your heating, your food, the prices are rocketing. The prices are absolutely rocketing. I've talked about money coming out. So money coming in terms of cash flow. It's a tough one because most people are employed. So money coming in, technically, at a cash flow level, like a day-to-day level, is your salary. But that's not really coming in every day, is it? For most of us, that's not coming in every day. That's coming in at the end of the month. See how cash flow works? See? Sometimes there's not enough month at the end of the money. See how cash flow works? Your car broke down, you need to fix it, your boiler broke down, but you got to wait to the end of the month. See? This is what cash flow is. Day-to-day running. Even your salary, to me, it's very, very difficult to call that actual cash flow. It's very difficult to call that cash flow because actually, if you were in a situation today and you had to spend 5, 6, 7 bags on something, 2 bags on a boiler, you need to, travel for work and car is more cost effective. You need to, whatever the situation, even just the 2-bag boiler thing, 2 bag for a boiler, you don't have that money, you don't have it in front of you. You might not even have the lending facility to get lending for that. So you've got to wait till the end of the month. You see what cash flow is? What if you can't wait till the end of the month? What if you got bills to pay? You got you see what cash flow is? So that's how deep it is. You guys are thinking your salary can counteract your day-to-day spending. Your salary is not day-to-day. The only thing that can really counteract day-to-day spending is savings. If you've got like savings there, then you could reach into that, grab a little 2 bags, and then bust yourself out of the situation, and get yourself a boiler. And then hold tight, hold tight, cup your balls, hold tight, and hope that nothing else goes wrong until the next payday. But you see, in a way, cash flow is all expenses. You can't run away from it. You're spending money stupid. Forget your income. Just look at what you're spending and make sure that you're spending. It's what my mum always say. Make sure you're spending in accordance to the way your suit is cut. So don't be spending outside of your means effectively. But again, when we're talking about a cash flow statement, we're talking about cash and cash equivalents. So when I'm talking about spending physical money on, one haircut every 4 days, one haircut every 3 days, when I'm talking about spending physical money on stuff like that, that's cash. But you see, there's other cash equivalents that you're actually bleeding. So one of them is depreciation. That is not actually physical cash coming out of your pocket, but the value of some of the things that you're using are going down, and that's going to be something that actually comes out of your cash flow. So you've got to think about that, even though you don't necessarily see that leaving. It's kind of like multi-layered losses in a way. So you spent some money on clothes today. You worn the clothes. They're old. They're washed up. That is depreciating assets. Spending money on clothes, like high value clothes, is depreciating assets. You spent big money on maybe one bag. All right, let's be normal now. Not everybody buys £1,000 pairs of jeans. But even if you bought like a £300-400 pair of jeans, the boiler breaks down. Now you got £300 pair of jeans. You want to get £300. You can't get £300 because it's worth £20 now. You can't even be able to sell it. It's not in good condition. That's depreciation. So basically the top 3 depreciating assets or purchases is clothing, and then next one is your car. Yeah, that's like, because the car is not as efficient now, it's costing you more to run, so your costs are going up, so it's affecting your cash flow. See, so clothing, then you got your car, but the number one depreciating asset of all time is you. That's right. You don't do your day-to-day stuff so that you can actually be growing. So you're depreciating. You're doing the opposite of self-developing. You're depreciating. So that's basically your cash flow statement, and it's really all about cost control. It's really all about cost control, because the average person doesn't earn money daily. A lot of people don't even get money weekly like that. So typically, for a normal human being, you are always spending. And at the end of the month, you're hoping for something to come in and reload. But what if something big happens before the end of the month? You're in a situation. So the first rule there is get yourself an emergency fund. Do yourself a favor, get yourself an emergency fund. You do not know what the hell is around the corner. Make that emergency fund a couple months of your expenditure, please. Yeah, 3 to 6 months. Do yourself a favor, because like I said, there is typically never enough month at the end of the money, let alone money at the end of the month. So yeah, look at yourself on a day-to-day cash flow basis, and just count where you're bleeding, you're urinating, everything's coming out of you. Why can't you just sustain yourself a little bit better? You just let everything just come out of you. You put money in your mouth, you're coming out in feces. You haven't even actually eaten anything nourishing. You're putting out. It's crazy. But that's where, at the end of the day, if you can't fix that, you're not going anywhere. If your day-to-day is not right, you're not going anywhere. Forget it. You're just going to be wallowing in God knows what. So the next statement is called the income statement. Now, there's different terminologies for this. You know, people might call it a profit and loss account. A lot of different terminologies that you want to call it. We're not really concerned about that. We're concerned about you and effectively what that means to you and how you manage yourself as a business personally. So an income statement is basically something that shows your annual profit or loss. That's right, it's done for a period of over a year. The cash flow is something that you do daily. The income statement is done for a period of typically at least 1 year. Sometimes it can be more, sometimes it can be less, depending on, you know, maybe you need to look at a shorter period of time, but it's a period of typically 1 year. But even though it's a period of 1 year, I would always recommend you to spot trends in yourself. So look at your basically it shows your income and expenses over the year, right? Your over the year. So see, now we can maybe include your salary. See why I didn't include the salary in the income statement? Because income statement is day to day. You don't get a salary in a day. You don't get paid daily. You get paid at the end of the month for the whole month. So we can't really include that. With the income statement, you can include things like salary because it's over a whole year. You know, even your salary is actually expressed as per annum. You see, so we can include that as an income into your income statement. However, like I said, what you want to do with an income statement is you want to look at the past years and put together a 3 to 4 to even decade-long plan for improving the income situation or improving your profit and loss account. Basically, your annual income versus expenditure. And you know, it's not just salary. You know, you got other income sources that come in. So you might have rental income, for example. You might also have you can call it investment income. The term that is used is dividends. You know, I don't want to go into too much detail. I don't want to confuse anyone here, but if you've got investments, it can give you an income. This income can be called sometimes dividends. If you've got your money in cash, let's just say cash, or if you've got your money in like you've a fixed return, let's just say you've got a fixed return, then you might be receiving income, for example, right? So you've got, let's say, interest income, which comes from a bank account. You've got investment income, dividends, which comes from holding, let's say, some equities, stocks or shares, ownership in some companies, and then rental income. So these are all things that go into what they would call your total revenue or your total income for the year. You might also have a side business that goes in there, right? You might have a couple hustles. You might do a little social media things. You get a few gigs here and there, that type of thing. So all of that will come in as your income. And then crudely you deduct your expenses from that effectively to then get what you would call profits for the year. And we'll talk about how that links into the next thing I'm going to talk about, which is going to be the balance sheet. So we'll talk about that in a second, but I'll take a little bit of a water. I always forget to do this. I always forget to do this. It's supposed to be going for an hour. This is an egg timer that goes on for an hour. I always forget to put this on, but we're going to hopefully go on for an hour. I think that's an hour or 45 minutes. Okie dokie. Hopefully everybody's with me. Everything that's not gone all over your head, and you know you're. Or maybe some of you guys will run out the chat. Some of you guys are like,
damn word come out your mouth. I got money.
Some of you guys are like, I got money. You know, I got money. So you know, you guys might have run around and just left the whole thing. Some of you guys might even be in a worse situation where, like I told you, you guys might literally be in financial hell right now, but actually rejoicing in financial hell. Like I said, some people are broke down right here, broken, brought down, and they're still going out and having a good time. Like these guys. I can see you guys right now. You guys are just doing the brokey dance. You man are just doing that brokey dance. The brokey dance. Well, look, you know, you guys can leave if you want to leave. It's up to you. But we're just getting into this. We're getting into this now. It's getting lively. It's getting lively. So we talked about the various sort of income areas. We've talked about looking at your income over a number of years. So when I say look at income over a number of years with property, you might want to look at how you can grow your rental yield. Okay, so you might want to look at past trends and then how you can potentially grow that rental yield. You know, with dividend income, you might want to look at rearranging maybe the investment so that you can grow that dividends. With interest, you might want to look at different accounts, bank accounts that offer better rates of interest. Right now, the interest rates that banks are offering, because interest rates have risen, is getting competitive now. So, you know, you might want to go and have a look at that. So once you got all your revenue, then you're looking at deducting the cost of generating that, basically, some of the costs of generating that, you know. So you're looking at basic stuff like, let's say you've got travel that you use to go to work, for example, and so on and so forth. Now, something interesting though is expenses in general. You know, some people have the misconception that you can expense everything. Everything is an expense. I can expense this, I can expense that. When I move to the corporate world of business, and I'm going to relay this back to yourself personally, it's going to be the same kind of thing. You can only actually claim an expense for it to actually go through if it's wholly and exclusively for the purposes of business. Now that's in the real corporate world. But when you look at yourself as, you know, you're looking at your income statement, you're looking at all the money that's coming in and all the expenses, I see it as this. I see it as some people will be like, yeah, that's all right. Yeah, like in your mind, you're saying that that's an allowable expense. That's not bloody allowable. That's not bloody allowable. You're saying, oh yeah, we're doing, that's what I put that down as socializing. That's not bloody allowable. Now, what I will give you, right? What I'll give you, yeah, I'll give you your holiday, your birthdays, you know, close immediate families, birthdays and stuff like that. If you really want to do these things, and I'll give you one trip, cost-effective trip of self-discovery a year. You might want to call that a holiday, but it should tie into something. Like, I'll give you an example. Let's say you are really keen on Muay Thai. So you decide to go to Thailand and you party, but you also learn some Muay Thai. Or you really love the Portuguese language. You decide to go and you really like dancing. You decide to go to Brazil. You learn more Portuguese and you enjoy the carnival. And you see what I'm trying to say here? That to me is an allowable expense because it's wholly and exclusively for the purpose of your business. Like, you personally were trying to develop in those areas. You can't now tell me you've gone to Magaluf and you've dropped 3-4 bags, you've spent all this money and you've come back and you've just blown out the bank and you've just been blowing out people's backs, and you can't tell me that's an allowable expense. Like, I needed to do that. No. You can't come and tell me that I needed to buy all these drugs and smoke them. And when I say drugs, I'm not just talking the drugs that you think are drugs. I'm actually talking nicotine too. That's a drug. Nicotine is a drug. So you can't tell me, oh yeah, I needed to smoke this to get to sleep. It was wholly and necessary and exclusively for the purposes of me being me. No, no, no. Expenses are supposed to be wholly, exclusively, and necessarily for the purposes of business. Okay? You can't tell me that, oh, you had to order all those Ubers. I mean, you're bloody going to link chicks. You don't have to link millions and millions and millions of chicks. But what you can do is be real to yourself and say you're flunking money. And you, like I said, cut your coat. You know, some people can afford to flunk money, like loads of money. Nothing wrong with that. I'm not. This ain't the jury here. I'm not. You know what I mean? I'm just letting you be real with your financial situation when it comes to accounting for what you're actually doing financially. Spending money on Miami holidays, smoking, stupid nights out, that is not an allowable expense. It is not wholly, necessarily, and exclusively for the purpose of business. Well, great. Now that we've got that out of the way, what would be, have a think about it, what would be an expense that would be wholly, necessarily, wholly, exclusively, and necessary for the purpose of business? Let me take you to that world for you to think. What would be wholly, necessarily, and exclusively for the purposes of business, for the purpose of you developing yourself as a person and financially? One expense, again, we're relaying real world stuff to your personal world. One expense is the cost of education. That's right. That's right. Education, if you spend money on a course, that's, you know, obviously, I mean, most courses you can always argue it's trying to develop you, but effectively, if you spend on a course that makes you better, more skilled, etc., that is an allowable expense. I can let you have that. I'll give you that. This is where you got to kind of be smart. This is where, like, you know, you've gone to Thailand to effectively train in a certain area, and you're gonna have fun. This is where you get the best of both worlds. But spending money, expenditure on educational courses and the like, qualifications, vocational courses, trips overseas to perhaps test something out, or, you know, look at something, market research, product research. We're not talking product research when you're trying to research Nyash all over the world. We're not talking about that type of product research. We're talking for yourself to grow. And this is why I said, you know, self-discovery trip. I'll give you that. I'll give you a self-discovery trip. I'll give you that. Maximum one a year. I'll give you that. Also, an allowable expense in terms of the personal world. Business world, I know you might have to get a good accountant to put that through for you. But spending money on your fitness, gym equipment, footwear, not like Jordans, footwear, clothing, just whatever you need to make sure that you're in the gym and you're adequately, you know, you've got an adequate uniform for the gym. That's another thing that you can actually expense. Uniform in the corporate world. That's if it's an actual uniform. But I'm talking from the point of, that to me is allowable. If you're spending money on, you know, maybe you want to increase the amount you spend on a gym to buy a nice one. You don't want to go over the board, but if you're actually going to go to that gym and put in work, that's an allowable expense. You're getting better as a result. You're putting in work. If you can do it without spending so much, that's better. But if you prefer to be in a really nice, comfortable. I got two gyms. I got a gym that I go sauna, steam room, swim. I got another gym that's kind of open 24/7. That it just gets ugly in there. I like it ugly. That's when I want to work. Then another gym where it's just a bit more nice and fluffy. But I'm in the gym. I'm in the gym. I'm self-caring. You know what I mean. My health is my physical and mental health is being looked after, and that to me is an allowable expense. Another expense, which is in the real world too, is pension contributions. We're gonna talk in personally. We're just gonna say investments. So if you spend money on, putting it in a pension, putting it into an ISA, again, these terms I know you may not be familiar with, especially if you're in other countries. But if you take money and you invest it, that to me is an allowable expense. That's okay. That's okay. Taking the money and doing an educational course, that's like an investment in your education. You can invest in another company's future. That's an investment to me. That's an allowable expense. You could take from your income. Yeah, if you take from your income and you put it into an educational course, you put it into something like the gym to make you fitter and healthier. You put it into another person or another company so that money grows. These to me are what I would call allowable expenses. We're not talking. I'm not your accountant. I already gave you that spiel. This is not advice. So don't come to me and try and find me out of nowhere. You pull up at my business. You're spying on me. Don't do that. Trying to put me in the X Files. He said this. He said that. No. Don't try and do that to me. This is only information. If you want advice, speak to a suitably qualified professional. Don't look at a Donny in a suit on YouTube and try and get that advice on a whim. It's not going to work for you. But effectively, a pension contribution is something you can actually do in the real world. And if you had a business, you can expense it. But for yourself, any money that you put in investments, I would say, is wholly exclusively necessarily for the purposes of your business. Then you could, that would be an allowable expense. So pretty much, without going into too much detail, that is your personal income statement or profit and loss account. You look at all your incomes and then all your expenses. We're talking about your personal income statement here. So some expenses that you've got, I would not allow those expenses. You need to go and look at those expenses. You can carry on expending in that way, but just realize that those are not really expenses that are wholly and necessarily for the purposes of you being better financially. You're just blowing money. And sometimes you gotta blow a little bit of money if you've got it. Even if you don't have it, as you guys are doing tonight, suit yourself on that one. Cool. So I told you what accounts are, what they're used for, what they do. I've jumped straight in onto your cash flow, and then I've moved into your profit and loss account. We're going to go to the last one, the final furlong. We're going to talk about your blood clot balance sheet. Okay, your blood clot balance sheet. Here we go. Your blood clot balance sheet. So what's a blood clot balance sheet there? Why a blood clot balance sheet? Well, moving the blood clot aside, balance sheet effectively shows a snapshot of your wealth for that moment in time. You see that? See, the balance sheet is it can be very deceptive. It can be very deceptive because your profit and loss, your cash flow statement, you could do that over a year, you could do that over a month, you could do that over a day, right? In a day, your cash flow actually changes in a day. We can see in one day what your day-to-day spending is like. Maybe, you know, on a Tuesday, everything you spend on that Tuesday is probably what you spend at least Monday to Friday, because on that Tuesday you'd have gone to work, you know what I mean? It could be quite indicative of, you know, you obviously got your other expenses, such as, you know, maybe let's say, for example, your rent, your mortgage, etc., etc., etc. But you can get a lot of insight into you as an individual from looking at your cash flow statement, even over a day, right? But cash flow statements, you could do them, they're done over days, months, years. Your income statement, again, that's done over a year. So you can get a very good idea of what someone's doing. There's very little wiggle room there, you know. You might be fiddling a couple expenses here and there, but when we look at your income, we can see what you're sort of doing. The balance sheet, on the other hand, that's just like boom. Like I could do a balance sheet today, and I could do a balance sheet now and a balance sheet 10 minutes later. Someone's transferred in a big asset. Now it's looking different. See? You know, or let's say let's say, okay, I don't want to go into too much detail, but if your capital is in something volatile, if most of the assets you own are in something volatile, that can change day by day, second by second. Let's say all your assets that you owned were in cryptocurrency, that could be changing day. You see what I'm saying? So it's quite deceptive. Like if you see an income statement over the year, that's the year done. You know what I mean? You got to look at another whole year to kind of see, you know, what's happened. But with the balance sheet, you can look at it every second. You can look at it, and it could change. But yeah, it effectively shows a snapshot of your wealth at a specific moment in time, and it's split typically in three groups. And I'm gonna bring up a hopefully this is a Marcus Quasi first. We're gonna bring up a screen. You have to give a round of applause for that. Thank you very much. Oh, we got someone in the live stream. We got someone in the live stream. Someone's bush watching. Yo, hang tight, the live stream bush watchers. Big up, big up, big up, big up, big up. I'm gonna give you a round of applause as well. Well done. Someone's bush watching right now, village viewing. I'm loving it. I'm loving it. I always say, I'll say it again. Put a 3 in the chat. Put a 3 in the chat. Let us know you're here. Like or dislike, show that you were here. You know what I'm trying to say? You can't just be bush watching all the time. You know what I mean? No likes, no dislikes. You're just out here doing whatever you want to do. I'll be doing that, man. But anyway, as I said, we're about to see a world's first exclusive here on Marcus Quasi. We are about to see a shared screen. So I'm gonna add that shared screen. Boom! Woo! Woo! We got me on the side. Yo! Yo, you got me on the side and the ting on the right hand side. I'm a YouTuber, everyone. I've done it. I've made it. Yes. Come on. Yo, I'm a YouTuber. Thank you, man. You made me happy. Okay. So, you know, you can see that on the side there. Like I said, I've officially just become a YouTuber by doing that. 3 main parts of the balance sheet. One is assets, another is liabilities, and another is equity or capital. Okay, so again, we're gonna look at yourself, you there partying up all night, 2:30 a.m. You still got another 30 minutes. You can either move on to a ratchet club, do a 5 a.m. club egg or something mad. You could do, yeah, a couple little bars in Lewisham probably now. You could do a, what's it called, Hyatt, something. You could do a couple things. You could do a couple things right now. but we are keeping it fully locked and loaded here. It's Marcus Quasey. We're talking about your chick's hot, financial hell's hotter, and we haven't really touched on, you know, that your chick is hot or your man is hot, but financial hell is hotter. The reason why, you know, I started it with your chick is hot, because I'm a man. You could also have your man is hot if you like men. But a lot of the reasons why, when we look into our personal financial statements and it's all in disarray, is because a lot of the spending, a lot of the misplacement of assets is actually down to the hunger and desperation for the chicks, the hot chick, the hot guy. They're hot, fine. I'm telling you. Oh, look, hey, they're gone. They're gone. Look, they're gone. The bushwatcher. They came, they saw, didn't leave a like, didn't say anything, didn't put 3 in the chat. They came in and they bust out. Doing me that, yeah? You come in and you bust out. Okay, right, okay, yeah. He's there. I got him. He's there. Yeah, he's in. Yeah, the guy in the suit. Yeah, he's there. I got him. I got him on there. Yeah, we got him. We got him. Go report back to your authorities, man. Leave me here. I'm trying to put in some work, trying to help the people there. Okay, so like I said, look, the chick is hot. You know, chicks are very hot, but financial hell is hotter. Most of the time, the reason why you're in financial hell is because you're doing it all for chicks. You know, you're misspending, misappropriating your financial obligations effectively. Now, the balance sheet, 3 main components. You got your assets. These are things that you have control of or own. Your liabilities, these are people that you owe. So I mean, obviously here it says, you know, non-liquid or liquid assets, and it just gives you details. It says financial obligations. So people you owe, things you owe, stuff you owe. And then on the other side is equity or capital. That's stuff you basically own, and it includes retained earnings. So when we're talking about retained earnings, basically it links back into your income statement or profit and loss account, because when you look at all those incomes, you look at your you look at your salary, your business income, your rental income, and you deduct all your expenses. Whatever's left is your profit or retained earnings, and that is equity now, because you can use that to do something. You own that extra money, that extra value, and you can use it to do something, along with anything else that you own. Anything else that you own, you can use it to do something. Now, this is the interesting thing, and I remember back in the day, man. Back in the day, I see a lot of like guys, like 17, 18, a lot of guys. I'll see them in the passenger seat of their girl's whip. I used to be like, nah, I could never do that. I could never, ever do that. Like, I need to be trying to work on me. I need to be trying to, you know, grow me effectively. And it used to always really make me feel a bit uneasy seeing that. Are you guys gonna be comfortable? Hey, Bushwatcher is back! Yay! Them Bushwatcher couldn't get their internet sorted, so they had to drop off a little bit, but they come back. So hey, how are you doing, Bushwatcher? You know, reporting me to the authorities. Anyway. So yeah, back in the day, I used to always see. I mean, when you're young, it's hard to get a vehicle. It's very hard to get a vehicle. Fair enough. I used to see a lot of guys in girls' whips, you know, on the passenger side. I used to be like, I don't want that imagery. I don't want to be in that boat. And I'll tell you why I don't really want to be in that boat. Because if I've got a vehicle, I want to actually be able to own it. See, equity, if my mouse is working correctly, equity are things you own. You want equity. It's more control. More control. Total control. Equity means having total control, and if whatever you have total control over improves, you have total control also over the improvement. You can benefit from it totally. Now, these guys that were in the passenger seat of these cars, they didn't have control of nothing, really. They didn't own anything. Let me get the words correct. They didn't own nothing. More time they were worth nothing. But they could control a whip. See? This is where you look at assets. Now, an asset doesn't need to be something you own. If you have a girl that's going to give you her car, that's an asset, even though you don't actually own, obviously you don't own the girl and you don't actually own the car. But if you've got control over or access to a car, that's an asset. You know, that you can value that however you want to value it, but that's an asset, you know. So yeah, I just never liked the whole idea of that. I always wanted to run my own stuff, and yeah, it just made me uneasy. You know, you don't even your girl could kick you out and split with you, and now you're using her whip to get to football training, and if you split with her, you can't go to football training. You see, I just didn't like that. But on the flip side, it's an asset because now you're able to get from A to B, and you don't even own the damn thing. You don't even own the damn thing. You know, you didn't have to put your money down. So with assets, you see some examples there. Cash, bills. Obviously, this was ripped from an American thing. You got your dollars up there. Bills. I mean, I don't know if they mean bonds or something. Loan. I don't know what they mean. Accounts receivable. So people that owe you money. Inventory. So stock, property, and equipment. These are assets. Your laptop, your computer is an asset. You can use it. You can make good use of that in many ways. Liabilities, as we touched on, they're obligations, things you've got to pay back. So you've got your accounts payable, wages. This is looking at it from a business perspective. So if we look at it from a personal perspective, liabilities, we're talking about, this is an interesting one. Let's say you've got investment property. Is the payments, the monthly payments that you're making towards that investment property, with the investment property rising, let's say 2 to 3% a year, and you making the payments, which actually you're getting rental income, which covers the payments and then gives you £3,000, £4,000, £500, £1,000 a month. Would that payment then be classed as a liability? I don't think so. I don't actually think so. It's got rent there. I think they talk about business rents. If you're an individual and you have to pay rents, that you can put that down as an expense, but it's also part of your liabilities. Yes, maybe short-term current liabilities. Yeah. Deferred tax liabilities. Yeah, you people that are self-employed, you're doing your tax returns. You got to park money to pay these taxes as and when they fall due. So that's a liability. And then longer term debt. What do they mean by longer term debt? I would say a massive fixed overhead of some sort. If you had a massive fixed overhead, how can I put it? Woo! Let me go. Oh God, I'm gonna set upset a couple of people with this one. Woo! A big. What is that? What do you think of? You're under 30. What do you think of a big, massive albatross of a debt over your head that you're servicing that's going to take long to clear? It's student bloody loans. I'm sorry. I have to tell you the truth. Yeah, I have to tell you. Yeah, it's going to be a painful one, that student loan, isn't it? It's going to be a very, very painful one. Yeah, I have to tell you. Yeah, I have to tell you. That's a very, you may never pay that one off. But that's what you call a long-term, let's just call it a long-term personal fixed liability. And then obviously equities, as I mentioned, you own that. That's your ownership. And with equity, that's where you're going to really propel yourself in terms of growth. You're going to use your day-to-day things to to get yourself in a position where you can be now spending money on growth. So you were spending money in your cash flow just to survive. Now your cash flow is in the positive. So now you got more money than the money you need to survive. That's going into your annual income, statement. And then at the end of the year, you're seeing that, okay, after I spent all of this money and looked at everything that came in, I've got a little bit of money here that I can, a little 15, 20, 30K. I could throw that into a property. I could throw that into some shares. I could throw that into myself and a business. And everything that you throw it into, provided it's things you own, become yours. And you could call that equity. We're talking my own assessment of you as personal in terms of personal finance. We're not talking business really, but there's overlaps, and we've used this model to show you that. Cool. Like I said, balance sheet is a snapshot of your wealth. Cool. This balance sheet has an equation to show where you are in terms of your wealth. There's a lot of different equations. I'm going to now probably fail miserably in your dreams, because I'm actually a don. Why is it okay? Oops. Don't know why it's doing what it's doing, but I am going to now show you the equation to realize if you have any wealth, basically. And like I said, this is for companies, so we're trying to do some crossovers and stuff like that. But it's going to effectively be similar. So I'm going to try and move on to my other slide. Back to me. And now hopefully we're going to go back to the new slide. There has to be a quicker way of doing this. There will be a quicker way of doing this. I'm just not good enough at this moment, so stay patient. Thank you very much. Okay. Boom. Do we see that? Is that in the live stream? Bushwatcher, can you give me a 3 in the chat if we can see what I've got, the new slide, the new screen share that I've got? Waiting for you, Bushwatcher, to confirm that the new slide is available on the screen. No, I think I can see it there. So this is effectively your wealth equation. There's different ways of doing it. I like this one because we're trying to focus on equity here. We're trying to focus on making you own stuff that can actually make you money. Assets minus liabilities equals equity or capital. So everything that you would class as an asset minus everything that you would class as an obligation, you are left with what you can play with in terms of equity. You're left with things you can play with, things that are yours. And that sums up the 3 statements. So I'm going to come out of this now. There's other ways of rejigging this, so you can go down the I think assets equals liabilities plus equity. That's another way you can rejig the whole thing. I like this one because the focus is equity, and for you personally, you should be wanting to own stuff. That's what you should be wanting to do. You can make money without owning things. That's fine. You want to own stuff. You want to have control over things that are going like that. You want to have control over things that are going like that. Excellent. So we're gonna jump out of this briefly, and let me just remove that. Here we go. Here we go. Here we go. So I mean, while we were just on the balance sheet, like I said, the balance sheet is a snapshot. Now you see it, now you don't. Now you see it, now you don't. Now it's there, now it's not. And most accounting frauds, are shown in the balance sheet. Yeah, most accounting frauds, you can see it in the balance sheet. I'll give you an example. This whole SVB case, Silicon Valley Bank. I don't like putting bank next to Silicon Valley. When I first heard of this organization, I was like, this is not a bank. They don't do what banks do, but whatever, I didn't see them. I kind of foresaw this. I knew a friend that worked for the organization. They grew way, way, way too quickly. And they're not really what that specific name says, bank, because banks do different types of lending. But let me not go into too much detail there. But basically, one of the biggest reasons why Silicon Valley Bank went bust is their balance sheet. They use a lot of government loans. You call them bills, gilts, depending on wherever you are. But they use a lot of government loans to basically prop them up. That's the asset that they like to have there, to, if needed, pass that on to either investors or whoever needs the money. That's what they like to use, if it's needed, effectively. Now, the value of these bills, gilts, basically these loans, they go down as interest rates go up, and interest rates are just ballooned to, in the UK, what it is now is 4.25%. Bank of England base rate. In America, it's a rate that I'm not currently aware of, so I'm going to have to leave that one to you Americans. Put something in the chat. Yeah, the other person, that all two of you put something in the chat. But the point I'm making is, as these interest rates, you've seen interest rates have been going up. As they go up, if you hold government bonds, the value of those are going down. Now, if you're then going to have to sell those to give to people who all of a sudden want to withdraw their money from you, because that's what happened. There was a bit of I don't want to keep using the word bank for Silicon Valley company, because they were not a bank in the traditional sense. So this Silicon Valley company had a bit of a run. They had a bit of a run. They run up on them. People that they're private equity investors run up on them, pull the plug. I want my money. They could just give you cash, because they tried to be smart, and instead of having like a load of cash, they had a load of bonds. The value of those bonds, with the interest rate rises, tanked, and now they're going to have to sell those bonds at a loss, to give to investors that want their money back. And the rest, as they say, is history. But it's all in the balance sheet. The balance sheet, you can see what's going on in there. That's where all the frauds and all the issues typically happen, in the balance sheet. Because it's just a snapshot. Like, you know what I mean? You can overlook these things forever, and unfortunately, that's where SVB, I don't even want to say B, Silicon Valley Corporation, that's where they got unstuck. And look, like I said, this was from a personal perspective. People can see your accounts in the way you carry yourself. Yeah, people can see the state of your accounts in how you move. People can see that your cash flow is not quite right from how you're moving. Now, what I would say is, obviously, you can't see everything all at once. So don't assume that because someone from a day-to-day perspective, or like they only earn 50K a year, or that only, let me rephrase that, they earn 50K a year, or they earn below the national minimum. Don't assume that because you're earning, let's say, £10,000 a year, that same person earning £10,000 a year doesn't have a balance sheet, a net wealth, equity of millions, because sometimes people do, but typically you can smell someone's financial statements. You can see that odor, Look, I'm telling you, man, like, most of the people that get themselves in financial difficulties, it's all most of the time for gal or for man, if that's what you like. Honestly, chicks are hot. Chicks are hot. There's gonna be chicks in the future. There's gonna be chicks in the present. There's gonna be chicks in the past. But financial hell. Woo-wee. Woo. I've had some financial infernos, I tell you. Financial hell is so much hotter, and hopefully this is kind of giving you an overview of how you should look at yourself to try and shore up your personal finances. Look at yourself as a business. It's very important to look over your personal accounts, make sure everything's ticking over nicely. Check yourself for that unnecessary spend here and there, or check yourself for having a lot of money in your retained earnings. So you profited for a year and you've not even reinvested that. It's just sitting there now. That's also something you should check yourself for. You've not tried to, get another qualification or invest it in another property or put the money in another business, or you ain't done nothing with it. Even giving money to charity is, honestly, it can be good for your taxes, and it can also be good in terms of gratitude is free energy. It's free energy. So it can also be good in terms of your health, your physical and mental health, honestly. One thing I didn't touch on is intangible assets. So when we talked about assets and liabilities and capital, intangible assets is something that you need to watch as in terms of your personal finance, because an intangible asset is something that you wouldn't necessarily think it's valuable, but it can go really, really far. So something such as connections. Yeah, there's a lot of people living on connections. There's a lot of people that they might not even actually do very much and get a lot back. Like they may not, like you're outside, you probably just went out to get girls. There's someone who knows loads of people that are always around girls, and through those connections, they have access to a lot of beautiful women, for example, or they know a lot of people that do property investing, and through those connections, they now have a load of certified builders, mechanics, just, you know what I mean? And they can just make projects like this, and they don't have to do the initial work for that. They're just leveraging their connections. So intangible assets that are not physical in nature, intellectual property, man. Intellectual property is priceless, man. Sometimes intangible assets are the most priceless because they're typically quite hard to replicate. It's hard to replicate connections. You know what I mean? Like that's from a lot of time and effort, getting to know people getting to know you, getting around and having some expertise in a particular area. So, we did talk about a lot of things that were in the physical realm, but there's also a lot of, even like a good reputation, just generally as a person, that will go on your balance sheet as an asset. It's an asset. It's an asset. If you've got a good reputation, people might want to do more business with you. You might have, love interests that know about you and your reputation as a good guy. Maybe you've dated someone they know, and they may refer you to some other, well put together women, or if you like men, well put together men. Your reputation is an asset, but you can't touch it. It's an intangible asset, but that still needs to that needs to be in your personal balance sheet. It needs to be in your personal balance sheet when you put all that together. So hopefully today I'll give you some food for thought. I've kept it real. When you look at all the mismanagement of your cash flow or your profit and loss account, and even your balance sheet, you're right. Typically, you're doing it all for either women, gal, or man, or you're doing it to impress other people. Like when your finances are going to hell, you're typically doing it for women, girls, or just to impress other people. And that's why, your chick might be hot, but I'm telling you, bro, I'm telling you, financial hell is
The chick is hot, but hell is hotter.
The back once more. You need to tell them.
The chick is hot, but hell is hotter.
Okay, so I think that's me done for now. It's almost 3 a.m. You guys have been great. All one of yous. I'm gonna have to give you another round of applause. I don't know who you are. I wish you would show up or do something, but we've been struggling streaming all day. It's just been me trying to get something back, and I want to sort of make some dialogue with you. But you got me struggle streaming. You got me strip streaming. But I'll give you a little round of applause. Yeah. And until next time, I think I'm probably gonna see you tomorrow. I want to do this 5 days a week, Monday to Friday, but I might have to just do it every day. Once I start, I can't stop. So I will probably see you tomorrow for some more. This has been brilliant. This has been Finance Fridays, episode 1. Hope you've enjoyed it. Peace.